Welcome to Human Risk, a podcast dedicated to the understanding of human behaviour as a risk. Here's your host, Christian Hunt.
Hello and welcome back to the Human Risk podcast. On this episode, I'm exploring the subject of creative accountancy. What does that mean? What it doesn't mean is creative accounting. We're not about to explore the idea of cooking the books, though I may well look at that in a future episode. My guest on this episode, Alastair Thomson, is, however, an accountant. But as you'll hear, he's not your typical accountant. He approaches his role, which is advising companies that are trying to grow, in a way that you might not expect from an accountant. I wanted to get Alastair on the show because I'm fascinated by his approach. I'm calling it creative accountancy, that's my term, not his, because he's adopted a creative approach to the role of the accountant. It's relevant to human risk because I think one of the drivers of human risk in many organizations is people that focus solely on their theoretical remit of their role and don't see the bigger picture. That applies to accountants, but it also applies to compliance officers, HR professionals, and many other disciplines. Of course, there are some roles where we do want people to stay in their proverbial lane. If you're in air traffic control, working in a nuclear power station, or conducting medical procedures, please stay right where you are. But there are lots of other disciplines where we need to encourage the opposite, where rigid adherence to what your job title suggests you should do, or the way you've always done things, is exactly what we don't need in the 21st century. So although Alastair and I are exploring this in the context of accountancy, it's just as valid in other areas. What makes him unlike a traditional accountant is a lot of what makes him really good at doing what he does now. And I think that dynamic is worth exploring. So please enjoy my discussion with Alastair Thomson on creative accountancy. Alastair, welcome to the Human Risk podcast.
Oh, thanks, Christian. It's great to be here.
It's great to have you here. Look, I know who you are, but many of my listeners won't. So can you give us a little pen portrait as to who you are and what you do?
Yes. Well, my name's Alastair Thomson, and I work currently as a freelance finance director. So I help businesses that need different sorts of financial support. I've spent 25 years or so in sort of board level positions in financial and non-financial roles. So I've got kind of both sides of that equation. And really my interest is in helping businesses to grow. That's what I've done in my previous executive roles. And that's the thing I'm doing now to try and help support clients. And that brings together a whole range of different things that I'm sure we'll talk about in the course of the conversation. Because, of course, you know, running a steady state business is an entirely different challenge from running a business that's growing and perhaps going quite rapidly and is maybe getting ahead of itself a little bit in terms of how it develops. So that's why I find that really interesting.
And the reason I wanted to get you on the show is I think you have a really fascinating perspective. And you know, whisper, I'm an accountant too, but I wouldn't necessarily be hiring myself to put accounts together or helping. But I thought, you know, so headline is, you know, you're sort of CFO accountant, but actually when I listen to the way you talk about how you think about business, in many respects, it sort of flies in the face of the stereotypical kind of image that people have of accountants. And I wonder if you could just explore a little bit about how you think about running businesses and your perspective on that, because I think it's really interesting.
I mean, I suppose the kind of stereotypical position or perspective, rather, of an accountant, you know, you're sat somewhere with a red pen, aren't you? Or you're writing formulas for your spreadsheet that says reduce everything by 10%. I would have to acknowledge that that's maybe not an entirely unfair perspective on the profession. But I take a slightly different view because to me, what everybody, including the FD, CFO, everybody at executive level should be about building the business and adding value. And maybe slightly counterintuitively, that does not always mean cutting costs. Very often, cutting cost can actually reduce value, and spending more can increase value. So the idea that I'm an accountant and I add value and I do that by taking 10% off everybody's budget, I think it can be true, but more often than not, that's a completely misguided view of how businesses actually work. And I guess that's the sort of critical perspective that I would have, building value and reducing cost are not always the same thing. I would argue they're rarely the same thing, but they're not always the same thing. And getting the right focus on that is actually what makes the difference between someone who's really going to add value to the business, whether they're a finance director, CFO, CEO, any other position, or whether they're just going to be effectively working like, maybe a civil servant box ticky sort of person who's complying with all the rules and, oh yes, I've done X, Y, and Z, but actually I haven't switched my brain on in the middle to think about how I could add more value to the business than I am just through doing that.
And I love that, because you're absolutely right. If you sort of said to me, what are accountants there to do? Well, it's to keep control of costs, and there's always this fixation on costs.
Yep.
And there's that old adage about knowing the price of everything and the value of nothing. And the whole idea of bean counting, which is this sort of stereotypical thing, suggests the more, if you can sort of just sit there and look after the beans, everything will be fine, and totally disconnected from the reality. And the same criticism, I should say, is made of compliance people, who just sort of look at the rules. So you could sort of substitute accounting standards for rules, I guess, or regulations, and you get to the same point. And I find it very interesting that, when you talk in those terms, because I think it is a very 21st century approach, which sort of says, actually, we all need to muck in a bit. And this, I think many of the disciplines, quote unquote, that people get, sort of what it says on the org chart, doesn't necessarily reflect the reality of what needs to happen, particularly in smaller organizations, as you're highlighting. But I think more and more in larger organizations, if you behave, if I just look at what I do within the remits of my job spec and where I'm supposed to sit, you are not going to make yourself valuable in the 21st century, because many of those kind of boxes don't really, that doesn't reflect the reality of the world. That's a nice theoretical model, but in practical terms, we all need to kind of muck in a bit.
Yeah, I think that's true. And I think there's another, if you want to put a slightly selfish perspective on it as well, there's another perspective that says, actually, anything you can reduce to box ticking can be done by a computer halfway around the world. So, and maybe if it's not been done that way yet, it can be done that way in the future, and not terribly far into the future either. So unless you're bringing more to the equation than something a computer based in, California could do, then actually, what are you doing? And I think there is also, I'm also quite interested, and it's an interest we both share around, this sort of rules-based decision making. Because, again, it's entirely possible to tick all the boxes and still for things to go badly wrong. Behind every corporate scandal, there's always been an audit committee. There's always been an independent non-executive director. There's always been a big four signed off the accounts. There's all that's there. All the rules have been followed. All the boxes have been ticked. But actually, a massive own goal has been scored in spite of all those things happening. So it has to be more than just ticking boxes. Ticking boxes is entry level. You have to be doing more than ticking boxes.
And I love that depiction, because you're absolutely right. When there's a scandal, that's what people point to. They kind of go, the auditor missed it, or why did these people with all this experience not clock that? It's never a case of saying, well, they didn't bother getting an auditor, or they didn't, with a shock horror, there was no one running that department, and that's where it went wrong. You're absolutely correct. The boxes have been ticked and found wanting. And I love this idea of, and I think when you and I first spoke, is sort of stepping away from things. And you made the point to me around accounting standards, is a matter of interpretation. So we often think about rules as hard and fast things, a bit like speed limits, sort of binary. But of course, there's a ton of interpretation there around it, because by default rules can't, they can be, sure, food safety, you want super prescriptive rules. But generally speaking, many of these things, there's a lot of interpretation there, which I think partly explains sometimes why you have this facade of what looks like a box ticky function, but actually underneath it all, there's a lot of judgment and decision making going on that allows room, if people are minded to do it, to do the things we wouldn't want.
Yeah, and again, I think this is why, for me, people are much more important than systems, because actually everything in that decision is down to the individual and the individual making the judgment. Yeah, a long time ago, I used to work for a commodity traders in the city, and we traded precious metals and various other things. And the great thing about doing that is, you can sample, let's say, silver, and it's 99.5% pure, or it isn't. There's a test, And in that environment, you want a rule that says, is it 99.5% pure or is it not? If not, reject. If yes, accept. That's okay. But all those things that you've talked about there, fundamentally, you cannot prescribe every single possible situation and permutation. It is impossible. And some people try, and my personal philosophy is, as a general rule, the more conditions and exceptions and perspectives and things you try to write in, actually the easier it is to drive a coach and horses through it, because you can almost certainly find something in clause A/B/73 that more or less might be interpreted as meaning the thing that you wanted to do in the first place. And that used to be. It's different now with IFRS and things like that. But UK accounting standards used to be about, we're going to set the principles and then we'll let the professional people make a professional judgment. And then as the kind of US kind of approach came through, the back Sarbox and things like that came along, which is a heavily rules-based box-ticky approach. I don't think that's necessarily been a good thing for the profession, because you can almost certainly find something. If you've got a nice big long list of things, you can almost certainly find something that you can interpret to say, well, what I meant was what that says. I'm not sure it's better than when people said, look, for example, the basic principle is you do not rip off, deposit holders' money. That's the principle. And now the fact that you've come up with some weird and wonderful scheme where, you didn't rip it off, but you sent the money to this company and they sent it to a different company, and then the bank that the third company used went out of business and the liquidator distributed the funds to somebody else, but hey, it wasn't us, we didn't do anything. I think, well, you look at what we used to call substance over form, you'll remember from your own days. The reality is somebody's been ripped off here. The fact that you've been able to tick boxes along the way to suggest that, hey, it's nothing to do with me, Gov, is a wholly unconvincing perspective as far as I'm concerned. But often it's been done, in box-ticky compliance with the rules. Not the spirit of the rules, but in box-ticky compliance with the rules. And that's the bit I find a bit insidious about financial standards and so on, the way they're applied now, and the much greater degree of prescription that's built into every step of the process.
And I think it's, what I find interesting, it's a bad enough dynamic anyway, but if you look at a world that is changing rapidly with technology, for example, and sort of working practices and social trends, if you peg yourself to something too tightly, very strict, you're going to miss a whole load of things. I'm always struck by, the sort of regulation that was written for the television doesn't necessarily work for the internet. And so we think, so what do we mean by media? And things like, even if you look at things like money, cryptocurrencies, different dynamics to hard cash. And I think it's really fascinating that we take it's almost like the bigger the rule book, the greater, this is good, we've really thought about this. And you kind of go, even if you have thought about it, amazing, you're the brightest mind on this particular task. You've thought about it from the context of right now, which typically involves stopping the bad thing that happened yesterday from happening again. So we'll massive amount of focus on the rear view mirror. And zero ability in many respects, for understandable reasons, to predict exactly how the future will pan out. So you can end up with rules that are massively stranded miles away from the reality of the problems you face, yet feeling very comfortable because they're there.
Yeah, I think that's right. And I think, I've been sort of seeing a lot lately, as I'm sure we all have, of businesses saying things like, COVID, nobody could have anticipated that. It was impossible to anticipate. And I would agree it was impossible to anticipate COVID. However, was it impossible to anticipate a set of circumstances that might result in your business being shut for 3 months, let's say? I don't think that's impossible. There was a bit of a hullabaloo at the start of the current academic year when all the universities were going, we could be out of business because we're not going to get any students from China this year. And I would say, look, if your business is running in such a way that if you don't get the 10 or 15% or whatever the number is of students from China that you would normally have, you've really messed up your business model there, because for all sorts of reasons, we had the ash cloud, we had 9/11, we had SARS not that long ago. We've, economic impacts in China means that people can't afford to send the students here, what have you. I would say actually it's a reasonably foreseeable thing that at least a significant number of those students might not come. So if you're bleating now about the fact that, what a disaster for universities because, the student might not come from China, I would say that is plannable. The precise reason why they're not coming is less plannable. But, the fact that that's likely to be an issue at some point is not such a big stretch. The other thing which I find the risks and thinking about the structure of things is essentially what I call the Facebook approach, where, they do some pretty horrendous things, but they've got a brilliant get out, because their get out is, everything's been done in conjunction with our terms and conditions of service. And to be fair, actually, by and large, it has. And that's because their terms of service, clause 497, say, notwithstanding any of the above, actually, we can do pretty much what we like. So every time you go, I'm not going to read every word of this, you just scroll to the bottom, you click accept. You've accepted pretty much they can do what they want. So again, that's another one of those dimensions where if you can get people to sign their lives away, actually you can be box ticking all day long. It doesn't really matter, because there is no effective control. You've actually given away that control to a third party.
You obviously work with companies, that are building themselves up in that kind of growth phase, and there you expect uncertainties. You have, admit for obvious reasons, you have a bit more flexibility, but you also know that you need to demonstrate flexibility as you are proving your concept. And there's plenty of companies that start out doing A and end up doing B and have a successful pivot into that space. So there's a lot more sort of speedboat mentality in terms of being able to pivot. And then you look at some of these larger organizations, these sort of massive oil tanker equivalents, if I continue my boat analogy. And I'm fascinated by, to your point around universities, but I could add airlines into that. Yeah. Where the business model seems to have been predicated on some presumptions that sort of if traffic were to dry up for whatever reason, we're screwed. And I find it fascinating that you sort of go, you've allowed a business model to happen where you've effectively, it's very, very short-termist. And if those short-term fundamentals disappear, you're screwed. Now, there are, if you did that, banking, isn't allowed to do that anymore. So you have to have tons of capital there to cushion the blow for whatever reason. And there's all sorts of scientific calculations that go on, but we know it's a little bit, it's literally just like, let's put some airbags in, right? Just to make sure that if something does happen, we're okay. And we can build some science around that. But I'm fascinated by how many businesses, well-established traditional business models seem to be, on the face of it, you would go, well, they're going to be around for some time. But they seem to be blindsided. And actually, the larger the organization in some cases, the more infrastructure they apparently have around risk management, accounting, and preparedness for this, the more vulnerable in many respects we've seen them be. And I think it's really interesting. Some of that is, I can sort of see how you get into supply chain management where just-in-time supply chains sort of make economic sense until they don't. But it's really interesting how some really big beasts seem to have been blindsided by some of this stuff. And if they just adopted a little bit of the sort of mindsets that I'm sure you're talking about with your clients, they'd be better off.
I think that's right. And I think that's been true throughout history. So, I think there's two issues, I guess. So small companies, they've got much greater uncertainty and they're having to find a way. And yes, you're absolutely right. They have to be light on their toes. They don't necessarily know what's happening next. They may pivot to do something entirely different. Yes, absolutely, that's true. And in a funny way, although there's some risk involved in that, you're more likely to find your way through that because you're dealing with something where you are able to iterate. You are able to, take some low risk punts, perhaps see if they work out, then build on that if they do, cut it back if they don't. The big company thing is quite interesting because I think with big companies, what they often do is they often become obsessed about what they are, and they forget that actually they exist to serve a customer. So, good example for me is the railways in America. late 1800s, if you wanted to go any distance at all, you got on a train. That was pretty much the only way to do it. And then, of course, cars came along and airlines came along, and all the big railway companies were told, people would go pitching them. I'm setting up a new airline. Do you want to buy in? And they all said, oh, no, we're in the railroad business, son. Off you go. And the railroads forgot that they thought they were in the railroad business, but they weren't. They were in the we move people around the country business. So the minute there becomes a better way to move people around the country, you don't have a business anymore. And that's exactly what the railroads happened. It's a little bit, I suppose, like the growth of the internet. I mean, I quite like newspapers, to be honest, but I do understand a model that says, look, what people want is information. Newspapers used to sell information, but now there's a quicker, better, cheaper way of getting what looks like the same information. I'm not saying it necessarily is, but it looks like the same information. Then, for as long as you think we're in the newspaper business, then you've kind of capped your ambition, and that's likely sooner or later to fall over. The minute when you say we're in the getting information to people business, one strand of which happens to be putting ink onto paper and sending it to newsagents, that's an entirely different business. And you've seen with newspapers, I think we'll have the same thing coming up with transportation, for example, because, as we move away from petrol and diesel and onto electric and solar and all those other things, there'll be people who go, no, it's the sound of our V8 engine is what makes us a car company, and you forget that, no, people aren't buying V8 engines, except incidentally, they're buying a way of getting from here to the shops and back again. And if there's a better, cheaper, faster way of doing that, then they'll probably do that instead. That's the way humans are wired. We tend not to do the hard, difficult, expensive things if there's a cheap, simple, and easy thing to do. That we tend not to make that choice. So I think there is that sort of tension in bigger businesses because they think it's about the business. They think it's about them. And actually, it's always about solving a customer problem. The minute somebody's got a better way of doing it, your business is on shaky ground.
And as you were talking, I was reflecting actually. So Harley Davidson's, I think, a really good example of a company that sort of gets this. So they've moved into the electric bike market, and I test rode one of the prototypes a few years back, and it was fascinating because what do you associate with Harley Davidson? Well, a lot of noise. And so they were like, well, electric bikes don't make any noise. So what can we do? And so they've put vents on the bike that deliberately make more noise than is necessary and it's much louder than you do. It's not as loud as petrol engine, but it's much louder. And I thought that was a brilliant realization of sort of actually, we're not going to be, we could sit there and be blind to electric and go, we're not going to adopt this technology because that's not what our people want. Or we can find a way to try and bridge that gap. And actually, maybe going forward, people won't be as excited about the noise. Doesn't matter. We'll give them something that makes it comfortable for them to adopt. And thinking about all of those dynamics, I thought was pretty smart. And actually, I think there's a ton of, as you say, there's a ton of businesses. So this is what we do, missing the point. The this that you think you do isn't the this that your customers want. And so you've literally created. You're sitting on something that's very obsolete. And I think that. What's fascinating for me is that the speed with which things decline nowadays. If we look at traditional businesses, they've kind of sort of had time to evolve and work it out. And, your competitor's not going to come around the corner the next day and take you out. It'll take a little bit of time. That is no longer the case. And particularly, obviously, with digital businesses, it can happen very, very quickly.
The technology, I think, is an accelerator of the process. I think sooner or later something would have happened without technology, but I think you're absolutely right. It happens faster and it happens more kind of all-encompassingly. I'm just thinking in my working lifetime, when I first started as a boy accountant, would I imagine I could walk into a shop with my mobile phone, which by the way didn't exist then, on which I've got Apple Pay or Google Pay or something, and I never need to take my wallet out of my pocket. I never need to go to a branch. I never need to visit a bank. And I do everything on this computer I carry around in my pocket with me. Well, that seemed incredible. And, I wasn't a boy accountant in, the mid-Victorian era. We're not talking about that long ago. We're 30 years ago. It's and some banks have done better than others about developing digital offerings and so on. But I think you're right. And I think the other thing why digital is a particular threat is digital is generally a highly scalable and sort of network effects driven model, which means that if they get their teeth into you, you really are going to have a hard time, and you're going to have a hard time really quickly. I think the newspaper is probably a really good example of this, because they quite quickly went from, look, we make loads of money because all the estate agents, all the recruitment people, and all the car dealers in the area have to advertise with us because there's nowhere else for them to advertise. So they went from that 20 years ago, probably they were in that sort of situation, and since then it's only gone one way. So I think that's digital is a great accelerator, but I think people are slightly missing the point if they think, oh, we're being disrupted by digital. Because I would say, no, you're being disrupted because you've forgotten your business is about your customer. You think it's about you. Digital just, magnifies that effect and accelerates that effect.
And if we think about the sorts of companies that you're working with, I'm fascinated as to the sorts of things that you come in and look at and help them with, because very often, if you've got people that have started companies up, there's a vision there, there's an idea, and they're kind of driving this thing forward. And at what point do they call someone like you in, and what are the sorts of issues you're looking at?
Well, I think what tends to happen is, I work with some amazing people, it has to be said, and they're also people who've got the sort of self-awareness to recognize that they can take a business so far by themselves, usually, or maybe, with a partner or a wife or a husband or a whatever. But they're reaching a point where they're thinking, look, I don't have the technical skills and knowledge to take this to the next level. And I know I need to be bringing in other people. So like finance person, maybe an HR person, maybe a marketing person, depends on the background of whoever set the business up in the first case. And I think that's a very wise move, a very wise decision for people to take, and quite a difficult decision, because you're having to allow somebody into the kind of walled garden that has been your business up to that point, because I own it, I make all the decisions, I have I can please myself, sort of thing. And why it usually comes in, people come to this realization that they've tended to see growth, steady, quite significant growth year on year, and then it gets to a point where it's starting to plateau. And it's starting to plateau because essentially you've already done all the stuff you know how to do. So by definition, to get it to the next level, the business has to be doing some stuff that you don't know how to do. And then you've got a choice. You can either go off and learn how to do that yourself, which is probably impractical, covering all the kind of wide range of what a business does, or you bring in specialist expertise, and that's where we come in. And I think finance is a particularly interesting one, I suppose, because that's often where you're going to get your first signs of tension, because, well, look, I made 100 grand last year and I'm made 80 grand this year, and and my costs are going up, my revenue's not going up as fast as my costs are going up, and it's very obvious I have to do something there. It's maybe not quite so obvious if you're in HR or marketing or quality management or something else, but usually with the finances, there's a strain starts to show. That's the signal that says I have to get someone that knows how to do this. And I think the particular thing about what I do, because a lot of people think, well, I've got an accountant, somebody does my taxes for me,
right? A bookkeeper, for want of a better phrase, right?
Yeah, or a firm of accountants, but they're there to ensure statutory compliance, and they're there to make sure your taxes are filed by and large. Some have very good people who are also capable of doing other things, but in the main, that's what accounting firms, bookkeeping firms are there to do. Whereas the sort of expertise that most businesses need at that level, it's not really about the niceties of disclosure requirements. It's usually about, how come we're not making any money out of supplying this customer or this product, and actually it's the commercial aspect of the finance that is the bit they need help on. Almost anybody could do the books for them, and that's the key difference really. It's that commercial input. It happens to be grounded in finance, but it's not just about the finance.
And I mean, that's really interesting, because you wouldn't, as you say, like, if whatever business I'm in, my gut reaction, if you said to me, what are these things, what do these organizations need to turbocharge themselves, right? I could see the argument for saying that we need to bring in someone that gets marketing, or maybe we want to expand territories and they understand that geography of that territory, or we need a product specialism, right? The sort of the front end of it. It's really interesting to me that you're basically saying, for very understandable reasons when we start to unpick it, is actually it's almost in that sort of accounting engine room where there's significant value to have. Because I think in the depiction of the sort of, and the reason I used the bookkeeping thing in a slightly derogatory way was to sort of go, that's almost a sort of bookkeepers record what's happened. And actually, therefore, it's a nice chronicle of past events. What we need to be thinking strategically of, forward-looking basis, and therefore that we would naturally expect would be at the sort of customer edge of it, or maybe the R&D end of the spectrum. But no, it wouldn't naturally occur to anyone to say, well, actually, that's a job for someone in finance.
Yeah, and I think I would acknowledge. You're absolutely right. Of course, there are more components to it than finance. I think the one thing that I would say, and I've seen businesses do quite a lot, is they kind of keep investing in a model that is not the best model. So they're let's say they're selling a product that doesn't make them any money just now. Now they don't know it doesn't make them any money because nobody's done that sort of commercial analysis. First of all. But they think, well, look, we're selling £500,000 a year of this. So actually, if we want to grow our profits, we need to bring in a marketing person to make that £1 million. Well, I would say, no, you've probably just doubled your losses there, because if you were losing money at £500,000, you're probably going to lose money at £1 million. You have to sort out the business model that allows you to deliver that product profitably. And then, yes, by all means, bring in a marketing person and then turbocharge it. But why would you want to sell more of something that's taking value away from your business? Now, problem number one is, in businesses with multiple product lines, although you might think they ought to, a lot of businesses don't actually know what makes them money. They just know they shovel a big bundle of cost in a hopper at this end and a big bundle of revenue in another hopper at the other end, and somehow you put the two of these things together and there's some money left over. But it doesn't actually work like that. And where I would agree with you, your point about, would you necessarily be thinking, do you know what I need right now is an accountant? That's going to solve all my problems. Because, there aren't many situations where that's the first thought in people's minds. But it's the commercial aspect of finance I spoke about earlier on. It's understanding that business model is absolutely critical, because odds are your problem is not in finance. Odds are your problem is somewhere else. It's just manifesting in finance. And you need to kind of unpick where that is. So if you signed a loss-making contract 6 months ago that has a lead time of 6 months, you will find there's nothing wrong with your finances for 6 months. But 6 months from the date of signing that contract, your finances are going to go badly wrong. And you think you've got a financial problem, but you don't. You signed a contract you shouldn't have signed problem 6 months previously. And so it's kind of unpicking that, because very, very rarely do I come across people who've got a purely financial problem. Now and again it happens. You've got long-term financing, we should have short-term financing, or the other way around. Or you're overusing your facilities, or that happens. But that's much, much rarer compared to the number of times when actually, the issue is, did you know that you don't make a penny out of dealing with this client who's a third of your sales? Or this product that you make, actually you lose money every time you sell one. Why are you doing that? Either put your prices up or stop doing it are the two sensible options. But you certainly don't want to sell any more of stuff that's losing you money. And that's often the sort of perspective that I'm bringing, because what I would be looking at is actually, how does this business model work? And it's probably never consciously really been thought about, or if it has, it's been thought about at a I was going to say superficial. That's unkind. I don't mean it in quite that way. But people often, for example, think about, well, look, I'm buying this for a tenner, I'm selling it for £20. I'm making £10 a unit, aren't I? Well, not if your back end costs are £15 a unit. They're not. you're losing £5 a unit. No, but I'm making £10 a unit because I'm buying it for 10 and I'm selling it for 20, and you have to kind of go through this rigmarole that says, look, when you look at the end-to-end business model, this doesn't make sense. And that's very often the sort of understanding that actually, first of all, that tends to fix the financial problem pretty quickly. But the other thing that does is it unlocks the opportunity for growth, because now we've got something that's making us money, it's making us money reliably, and we know the levers we're pulling here for it to generate results for us. So now, yes, we are selling for 20 quid something that's costing us a tenner, and if our sales and marketing costs come to less than £10 to do that, we should be doing as much as we can all day long. And that's how we're going to grow the business. So that's very often how it works. There's a kind of unpicking process. So we know what levers we're pulling. We know where the challenges and the risks are. We know where actually we don't need to sell anymore to make more money. We just need to stop doing things that loses money. And then that gives a platform for growth. And then you put your foot in the accelerator and whoosh, off you go.
And it's really interesting, as you were talking, it sort of struck me that when one thinks about people that set up businesses, it's very often it's kind of something that they think is interesting or relevant, or that they're excited about, or they've had a bright idea, or they've invented something, or they've spotted a niche. And so there's a degree, you have to have a degree of passion / interest in the subject that you're dealing with in order to even start that process, because the sacrifices you make and the risks you take, all those sorts of things point towards you need a sort of degree of commitment. There are people that are dispassionate, set something up and it kind of works. But the majority of businesses, you need the person starting to have a bit of oomph behind them, and that comes from an intrinsic motivation. And I'm really struck by what you were saying, because as I reflected on the role you were playing, it's very much sort of childlike enthusiasm drives businesses when they start, because it is hard and it is difficult, and it's, of course, it surprised me actually when I set mine up. It is easier to set up a company than open a bank account. It's sort of slightly strange, but then you get the basic thing off the ground, and it struck me that you were sort of coming in at a point where it's almost, have you hit puberty, have you hit adulthood, not sure, but you've hit a point where that childlike enthusiasm, suddenly the world's a little bit more complicated. And that raw adrenaline that's kick-started you has got you so far, but it's potentially dug you into some massive holes.
Yeah, and I suppose to really kind of extend an analogy, I suppose, and just to kind of pick up the point you were making there. When I was at school, I was at school with a guy who was a very talented athlete. He used to win, everything. He'd be back in the changing room and showered before most of us had got across the finishing line. He's that kind of person.
Hate those people. Entirely unnecessary. Just slow it up.
Exactly. But the problem with that is he I suppose he got a bit cocky and what have you. So he's, bear in mind, I suppose we're maybe 15 or 16 or something at the time. So he started smoking, and he was, he'd be out late at night before the race the next day and things like that. And gradually over time, although he had immense natural ability, over time, actually, he wasn't in the change room before we'd finished. And then actually, he wasn't the first to finish. And then he kind of faded away and, never did anything. And actually, it's a good example of what sometimes you have to do in business. So actually, the way for him to retain his previous performance was, cut out the late nights and cut out the fags. The starting point for change is often to stop doing the thing that's holding you back. So if I'd been his coach, although frankly, you don't want athletic advice from me, quite frankly, but if I was his coach, I wouldn't be going, well, let's spend an hour on different techniques of how you get out the starting blocks faster. I'd be saying, cut out the fags, just do that, leave everything else the same, but cut out the fags, because that's the thing that's holding you back. And again, it's a bit like, proofreading something you've written yourself. It's actually really hard for a business owner to see what's holding us back, because actually I've made every decision in here. And at the time I made those decisions, I made them for the right reasons. And there was a time when probably that was a sensible decision to take. I'm not suggesting it was anything other than that. But roll the clock forward 2 or 3 years, or maybe there's a change in the marketplace, or maybe there's a regulatory change or something else. And actually now, what was a good decision may no longer be a good decision. Or it was a good decision when you had 10 customers, but the complexity of having 1,000 customers means it's no longer the best decision. But that is a little bit like checking your own homework, and it's incredibly hard to do. And so, very often as part of the work that I'm doing, it's almost going back to first principles a bit, and it's almost saying, look, I know that worked for me 10 customers, but now we get 1,000 customers. So how are we going to do this for 1,000 people, irrespective of how we used to do it for 10 people? Because that's getting in the way a bit. That we're trapped in that, and that's very often the bit that is a really helpful perspective from the outside for someone like myself who comes in and says, just explain why we do it like that. This seems like a strange way of looking after 1,000 customers. I'm not saying it can't be done that way, but I've never seen that before. And frankly, I'd be keen to understand the reasoning behind it. And very often it's things like that. It's the equivalent of cut out the fags if you want to be a superstar athlete. It's very often something like that just unlocks so much potential in the business because they never realized that was the thing that was holding them back.
And I'm struck by the sort of the cognitive challenge of doing that, right? Because, we all know there's a ton of biases there that point towards, change is hard for us. And for very good reasons. So it's not, I don't want to criticize the algorithm that's running in our brains, but we know that it's difficult for us to change. And so what you've just described actually is basically you're working with people with whom you're requiring them to change the way they think about things, right? To in effect, it may not practically be reversing it because maybe the decision, as you say, they made was right at the time, but is no longer right. So you're not necessarily criticizing the decision at the point at which it was made, but you are implicitly saying this isn't working. So that's quite a tough gig. And I'm intrigued as to whether, is it the fact that they're hiring you means they've already got to a point where they recognize it? So if I was to use very crude terminology, they've recognized they have a problem and they've gone to someone for help, a sort of therapist, if you like. Or is there still quite a bit of work that you need to do to get them over the line? How do you manage that piece of getting people who have poured their heart and soul into something to potentially stop doing something that has hitherto made them successful, or that they are absolutely convinced is the right answer?
Yeah, it's often there is often a little bit of a transition to go on because very often people like me are brought in because we've got a problem with our cash flow, let's say, or our profits aren't as good as they should be, and and as we said a few moments ago, actually no, that's your issue isn't the cash flow. The issue is the fact that you've taken some historic decisions which have now manifested themselves in your cash flow. So actually, I'm not going to fix your cash flow. I'm going to fix your historic decisions, and then the cash flow will sort itself out, sort of scenario. But so very often, the starting point is something's wrong with our cash flow, so you have to kind of get beyond that. But actually, the main thing that I tend to work on is I work with business owners' mindset and perspective, because these are all incredibly intelligent people. You don't set up a business from scratch and get it to 5 million turnover being an umpty. I mean, it happens maybe by the law of averages, maybe it's happened somewhere, but these are smart people. And actually, usually if you can take them through the thinking process and explain to them where this perspective comes from and point to them what might be different and how things could be better, I've very rarely found people going, well, no, I'm not going to do that. It's don't like the sound of that at all. And that's because once you flip the mindset, once you flip that perspective, actually from that point onwards, everything becomes, in relative terms, pretty obvious. So of course, why didn't we think 1,000 customers would be harder than 10 or more complicated? Oh, yeah, now you've explained that. Of course, I can see it. What do we need to do? So you actually, certainly my experience has been, you quite quickly move from we think we got a problem with cash flow to actually, yeah, we do need a CRM system. I can't think how we managed without one for so long, but it is just that, it's very hard to look self-critically at something you've done yourself. And in many ways, it's the perspective that's the big driver of change. Obviously, that's then allied with the financial background and expertise that allows you to say, well, look, your profit is X, it could be Y. Your cash flow is A, it could be B. The value of your business will be a multiple of whatever. So let's make that multiple as big as we possibly can. Let's reposition what we do. Let's look at our internal workings, because what we're trying to do, if you're in a multiple of 3.5 times EBITDA or something, well, our job is to get that EBITDA number up as high as possible, because then that's worth 3.5 times whatever that number is. So that's usually where we end up, because when it is a bit like when somebody explains something, what's that expression? Rory Sutherland uses it, but I will horribly misquote him, I'm sure, but so apologies if he ever hears this. but it's the concept that there's an awful lot of
to make sure he does. But yeah.
How kind of you, thank you.
I like to make my guests feel special.
But there's this idea that there's a lot more things that are rationalizable in hindsight than are rationalizable in advance. So once you've made the change and you look backwards, you go, of course, that's why the change has worked. But before you make the change, you think, oh, change is scary and I don't understand it and it seems very risky and all those sorts of things. And that's that perceptive shift. That's, if you can get across that point, it then becomes obvious, because now, in hindsight, you can rationalize why that works.
And I'm sort of struck by this, the difference between being in something and knowing it really well, and therefore bringing expertise to it, and that independence piece. And I was thinking, as you were talking about, we often talk about, well, the way you get people to make really good decisions is skin in the game. And so it's fascinating. You come in with no skin in the game apart from what you're being paid to do this particular thing, but you're not. You're clearly not hanging around, unless I've misunderstood your business model. You're not hanging around for the long term. You're coming in and doing your piece, and maybe coming back at some stage. But you're there for a temporary period of time, and and therefore that independence presumably is what gives you your ability to spot things they wouldn't otherwise. And actually, this is a really good example of where not having skin in the game is incredibly helpful, because you're not blinded by any of those considerations. You're just calling stuff out as you see it in a manner that is designed to be helpful, but you're not constrained by I guess you're unconstrained in your ability to comment. Is that sort of how you look at it?
Well, I think that's a really good point and an excellent perspective, because yes, the skin in the game argument, I kind of get that, but I spent a lot of my career in large corporate environments where the most unbelievably stupid things would happen, but nobody would want to speak up because the senior vice president for whatever had said it was going to happen, and their reputation for taking challenge was not great. So people would just be going, well, I suppose if that's what Bob wants, I suppose that's what Bob's going to get. And they'd kind of shuffle off and do whatever stupid thing they were asked to do. So actually there is that, there is that real speaking truth to power dynamic that goes on. And, it's at some level, people don't have to take our advice. It's still a choice. But what it does perhaps do is it gives a perspective that allows people to think about things in a different way, and to recognize that, because it's not just about them, it's also about, they've probably got a team around them that they've worked with for a number of years as well, who will be blind to the same things that they're blind to. They'll say, well, why didn't my bookkeeper tell me this? Well, probably because your bookkeeper couldn't see it for the same reason you couldn't see it. It's not a character flaw in the bookkeeper. It's just that there's this kind of collective sort of myopia that happens when everybody's doing the same thing and working together for a long time. And actually you need to inject something that's different, because that's what sparks a lot of questions that you've never asked before. And it's hard for people who are thinking, well, I don't want to say anything because I want my promotion, or I want a pay rise, or I want a whatever. and in the nicest possible way. Again, don't take this out of context, but we don't care. You've asked for an opinion. We've given you an opinion. It doesn't. You don't need to do it. You don't. It's entirely up to you. But that's a considered opinion that you might want to reflect on, and you either do it or you don't do it. And beyond, yes, of course, we would like our bills paid. After that, our promotion next year doesn't depend on how much we suck up to you this year. There is no connection between those two things. So there's definitely, as you were saying, there's a kind of speaking truth to power element to this as well. And we are slightly in a fortunate position because by and large, if we've been brought into an organization, usually a business owner has got to the point where they accept they need a bit of that. Because smart business owners will know that the people who, they're wanting a bonus or they're wanting a promotion or they're wanting a whatever, at some level, they're going to tell them what they want to hear. Right. And so, there is that independence is important. And it's why I've got this thing, and I know we've spoken about this before, but, this thing about corporate governance, you don't just need a non-executive director on the board. You need a non-executive director who's prepared to go, I've heard the presentation, and frankly, I don't believe a word of it, because if they're not going to do that, you might as well not have them. They're not adding anything to the mix here. They're just turning up, collecting a check and giving that appearance of corporate governance.
Well, I was going to say, it's almost worse, right? It's almost worse because on the face of it, it looks like you've got that covered, right? We have these non-executives here to do that. And actually, that's sort of why they ought to be here. And so I could either, if I was being disingenuous, stuff someone in that box and go, don't you dare ever challenge me and we'll keep you on the board for the rest of your life. Or actually just, so there's a willful blindness at the end of the spectrum. Or you could genuinely go, actually, well, I did think we had that covered because that's why we had this particular thing and they didn't spot it either.
Exactly. And that's why I've got this, for me, the real benefit in having an outside person, whether it's like an outside person for me in a finance role, or whether it's a non-executive director or a independent chair or whatever those things may be, it only works if people will actually challenge. And, and some organizations are better at this than others, but by and large, organizations which have failed because people haven't brought that challenge. There was nobody, or there may well have been somebody, so that's not, I don't want to be too dogmatic about that, but there clearly were not enough people back in 2007, 2008, saying to major financial institutions, do we think it's a great idea having all that subprime lending, which, and we all know that people can't really afford to pay this. Is that a great business model? Is that something that we want to stake the future of our business on? Now, I know some organizations, they got out. Some organizations were never in that sector in the first place. But there's an awful lot of organizations with eminent boards of directors and exemplary corporate governance who were ploughing straight into the buffers at the end of the station at 300 miles an hour in 2007-8 when the subprime crises hit. They didn't lack the corporate governance. They didn't lack the trappings of independence and challenge and rigor and all that stuff, but they still hit those buffers at 300 miles an hour. And that's where, the independent perspective, the if you like, in your terms, a different view on what risk might look like than the organization might have inside, can actually give you a huge amount of value beyond just whatever that subject is, because it's the opening up of a world to somewhere else. And that's the bit that gives great value, I think.
And the bit I find interesting when you talk about that, and the phrase I was looking for earlier when I described it, sort of unencumbered, is how I like to think about people that are able to speak up. And I've seen examples of that within institutions where somebody has known that they weren't going to be around for very long because they typically stayed in places, so they know they don't have to play the long game. I've actually had people working for me before that are independently wealthy, And it was only, they didn't tell me, but there was something about them that meant they were unencumbered. So they would say stuff that other people wouldn't say. And there was some sort of secret sauce there. And the fact was they didn't need the job, right? So they were freed that way. And my sort of human risk thesis around sort of looking at what I call the human risk radar is that in many cases, when something is going wrong, somebody somewhere within the organization does know, but that voice is never heard. And it's either rubbished at an early stage, so the view never evolves, or they're not trained to think in those ways. Now there will of course be things that you wouldn't spot because you're in it, but there's big things somebody somewhere knows something. And I think what's interesting about what you just talked about is that one of the things companies talk a lot about. Well, we'll encourage people to speak up, but that's really hard to do if your livelihood depends on kind of your income and So it occurred to me that actually one of the things that you do potentially is by raising things, you can legitimize discussion that could otherwise happen, but doesn't because of those encumbrances. So I like the idea, one of you coming with a fresh perspective. So stuff that somebody, you've seen something somewhere else that nobody else would, particularly with smaller organizations that are starting out, where maybe you don't have that sort of, the wisdom of years. You'll be spotting things, but you'll also be providing a really powerful thing internally, which is potentially legitimizing discussions that might otherwise not happen. And of course, it's that strange dynamic of, because we're paying you, Alastair, we will listen usually to your viewpoints, even if you're saying the same thing someone internally is saying. But I think there's something nice potentially about also just legitimizing it because, that guy that's come in has told us, that girl that's come in has told us this. So we can now, it's now on the table in a way that it might not have been before.
Yes, I think that's true. And again, a lot of organizations have this, don't mention the war sort of thing, don't mention that. I mentioned it once, but I think I got away with it. And it is, I have to say, it's more a feature of larger organizations I work with than smaller organizations. But that kind of delusion and self-denial thing it can be very powerful, particularly when somebody's ego and somebody's career is wrapped up in not actually being prepared to confront an issue. I mean, I remember a job I had once where a lot of money had gone into a new project, big revenue goals, from a more or less a standing start, millions of pounds a year within, fairly short period of time. And I came along at kind of month 11 of the financial year when they were 25% of the way towards achieving the goal for the year in terms of revenue. And I remember saying in a board meeting, I think we got a real problem with this, because I don't think we're going to do that. And everyone's going, what, really? Everyone has assured us we're going to hit the target.
There is a sort of slightly crude social, no shit, Sherlock, right? But nonetheless, the surprise that you get is genuine.
Oh, and I'd graphed it out, and I'd said, well, look, if we keep going, and we were on a growth curve, to be fair, but even if we take our most successful trajectory over the last, there's no way we're going to do more than a third of our target for the year, but the chief executive has assured us that we're going to hit our target. Well, that may be true, but I'm just presenting the facts here. And it was one of those things, because it was a chief executive's project that nobody was prepared to challenge. There was a real, don't mention the war sort of mentality around it. But actually, when you strip it back, and again, this is one of the things that we try and do, when you strip it back, you couldn't look at that scenario and think it was going to be anything other than a disaster. It's just that nobody had laid it out like that. And sometimes, data can be your friend. Sometimes not, but that's perhaps another conversation. But but when you look at that sort of scenario, we're in month 11, we're 25% of the way towards our annual goal. There's not many people that are going to think you're going to catch up that last 75% in the last month. Not unless there's something phenomenal just about to happen,
or you're massively fraudulent, right? It's the other option. The other one.
Well, don't get me down that road, because that was, I think, was where they were hoping to go, but that's
right.
Mercifully, that never came to fruition. But no, so there is this huge element of, yes, just by in that I mean, frankly, I was astounded nobody had said it before month 11. But just saying it, just that then had all sorts of people going, hang on a minute, I understand what that fellow's saying, and yeah, he's right. It doesn't seem to make sense to me either.
Right.
And it then unbundles a lot of stuff, which I got to say the chief executive was distinctly unpleased about. But you can only report the numbers as you find them, can't you?
Right. And the final question, because of the great conversation that we could clearly both of us go on forever, but we have to call time at some point. But as you were talking, and it's a slightly thorny one, but I'm going to throw it there and see what you do with this. But, a lot of the things you've talked about, shouldn't auditors be doing some of these things, right? So shouldn't they be picking that up? And it struck me that one of the reasons they might not is precisely that encumbrance point around either it's a very profitable gig in its own right, and we've been audited for many years, long may that continue, or the classic, we've got other services to sell piece. And I was just wanted your thoughts on that profession, because a lot of the things that you were saying around looking at the numbers and seeing what they're telling you. I mean, if you had somebody doing an audit, and there's this trend towards calling it assurance, which again seemed to me to point even more in that direction than the word audit. What are your views? I mean, could that function be fulfilled by auditors, or is that a step too far?
I think it's quite hard for auditors to do this, to be absolutely fair to them, because there's a couple of reasons behind that. The first is one that we spoke about sort of right at the start of this piece, which is actually more and more it's a box ticking exercise, because actually that's the way accounting standards have moved. And there is an element of not being able to see the wood from the trees. If you've got, it used to be you just had to sign off for true and fair view, didn't you? Whereas, now I've got 573 boxes to tick. And if I tick all those boxes, well, logically, it must be a true and fair view. But actually, I would argue, no, actually, it's probably less likely to be a true and fair view if you've got there through 576 boxes. So that's part of it. But the other part, and probably the more important part of the equation, is that you've got to have a level of commercial involvement in a business to be able to see a lot of this stuff. And to be fair to auditors, they just don't. They come along once or twice a year. They get the accounts, they do their data analyses, they check, for appropriate supporting documentation. They make sure that, you're complying with the listing requirements or whatever it might be that their role there is, or their, having to sign off, for a regulatory body or something like that. So auditors are there for that purpose primarily, and to some extent they're working with the answers. So in the example I used earlier on, where your cash flows out, but actually it was because you took a decision 6 months ago that's impacted your cash flow today. Auditors are just working with the fact that you've got that problem in your cash flow. So right. They're going, well, they've got a problem with the cash flow. We can see a problem in the cash flow, and actually that might be because of something 6 months ago, but that's actually not really what we're here to talk about. What we're here to talk about is you've got a problem with your cash flow. Their involvement, I mean, sometimes, to be fair, there are, and I think back to the various scandals over the years where auditors have clearly fallen short of their duty, and a variety of regulatory and professional bodies have handed out censures and, banned people from holding audit responsibilities and so on. But I think in the main, auditors do a good job within their brief. It's just their brief is not solving those commercial finance problems by and large. Their brief is, do these, does the balance on the balance sheet link to the balance on the bank statement? And if it does, then our job is done. So I think it's a different sort of expertise, and hard to do from the outside like auditors do. You have to have that level of commercial involvement in the business to make that work.
Beautifully handled, and I agree with you. I think that's a lovely. Look, it's been fabulous. Thank you so much. But before I let you go, can you tell my listeners how they can find you if they were interested in having you come in to look at their business?
Most certainly. The best place to find me of all is on Twitter, where I spend probably far too much time, but I like the stimulation from people like yourself on there. And on Twitter, my handle is FinanceDIRCFO, so short for Finance Director CFO, so FinanceDIRCFO. You can also get me on my website, which is thebetterbusinesscompany.com. And you can also find me on Amazon because I've written a couple of books as well. So if you look for Alastair Thomson on there, you will find one book about business planning, how to build a better business plan, and another book about how to boost your cash flow called Cash Flow Surge. So all of those things are available should you want even more.
Fantastic. And I have to say that social media is actually how we kind of met and built the relationship that enabled us to have this discussion. So highly recommend following Alastair. He has some entertaining and insightful views to share with you, as has been demonstrated on this podcast. Thank you so much, sir, for being a great guest.
It's my absolute pleasure, Christian, and great to talk to you again as always.
So that's it for another episode of the Human Risk Podcast. My enormous thanks to Alastair for appearing and to you for listening. To find out more about Alastair's work and to get in touch with him, have a look in the show notes. There's links there. If this is your first time listening to the Human Risk Podcast, welcome. You can subscribe wherever you get your quality audio content. It's available on all of the major podcasting platforms. To find out more about Human Risk, the work that I do with my clients, and to get details of the Human Risk video blog, and newsletter, visit human-risk.com. I'll be back with another episode of the Human Risk Podcast very soon. But in the meantime, stay safe, be creative, and thanks for listening.